Welcome to week one of the Impact Trading Profitable, Consistently Profitable Trader Program. All right, our goals for week one are to watch this video. We want you to be profitable from week one. We want you to find one trade using this trading method that allows you to receive the return on your investment for this trading. Now, the reason why the analysis and signal services is so highly profitable is because our analysis is based upon tried and true supply and demand and support and resistance areas. So week one, be profitable. Our goal for week one is also for you to draw accurate supply and demand support and resistance areas for the time frame that you're trading as shown in this training. And then we want you to back test live the trades from the areas you have drawn. Now keep in mind stop loss areas and profit targets. So goal one, be profitable from week one. We want you to find a trade using this method. Goal two, learn how to draw accurate supply and demand support and resistance levels for every trading day. Now here's your assignment. Your assignment is to invest in Tradingview Pro. If not Tradingview Pro, you have to have a backtesting function enabled in order for you to do these backtests. Here's the example. This is Tradingview Pro. We are going to show you how to draw supply and demand areas for these three bars right here, and then your assignment will be to do 70 bars of every single day. But in order for you to do that, you'll need a backtesting function. So whether it's TradingView Pro or another software, you'll need to be able to backtest so that you can actually do live trading. This is sell and buy, so you'll do live trading based on areas where you would have placed trades during the day. So you need a backtesting tool in order for you to do your trade practice. And then we want you to, in week one, once you've done backtesting, we want you to place a live trade based upon this method. And then always remember your risk management. And then you'll have resources in order for you to do some more study. Study, show yourself approved. So week one, what this video is going to cover is for you to learn how to draw accurate supply and demand areas. Let's get started. All right, right now we're going to practice February 6th. We'll start with February 6th, and we'll start drawing supply and demand and support resistance areas. Now we start with the day. How do we know? Every point, every open, every close, every high, every low on the daily charts are supply and demand support and resistance areas. Every open, every close, every high, every low on the daily chart is a supply and demand support and resistance area. Now that goes for weekly, monthly, hourly supply and demand support and resistance areas. Now we're going to test this for this day here. We start with the day. We've drawn this daily high. We've drawn this daily open, daily close. We've drawn this daily open, this daily close, right here. This daily open, this daily high, and the daily high of the day that we're testing. Now what we're going to do is see what agrees. Now this day is not here. We're going to see what agrees. Now remember, we're practicing the 6th, and we have to see what agrees for daily high and daily low on higher time frames. So now what we're going to do is go on the weekly time frame. This is a weekly high right here. This is a weekly high. So we already have agreement with these two areas of supply and demand support and resistance. Already have agreement. So we color code our areas. This is the color that we use for weekly. The blue we use for daily. Now this week wouldn't be here, but let us go back and see the blue lines that agree with weekly high-low open closes. That agrees. That line agrees. This line agrees for weekly. We have some others. That line agrees. That line agrees. Now you're going to have lines that are close to each other, and then you know that you already have agreement for that area. All right, so we just did that for weekly agreement. We've already drawn our dailies. Now we're going to go to the monthly. Okay, that's a monthly agreement. That's a monthly high. We already have agreement. This is a monthly open, monthly close. There's agreement there. We already have agreement here. Here's another line. So now we know these areas already in the past are supply and demand resistance areas because they're already drawn on the chart. So understand that during each and every day, institutional orders have already been placed. So we started and we've drawn all these lines, supply and demand, support and resistance, based on daily high, daily lows, weekly high, weekly lows, weekly open, weekly closes. Now that goes for 4 hour, that goes for 1 hour. If you're intraday trading, you can use this method for swing trading, intraday trading. Now let's see if these lines agree, and then now let's plan our trades for the trading day. Now we're back testing the 6th. We've drawn our lines, we went back, we drew our monthly lines, our daily lines. Now we see there's a lot of agreement with these lines. We'll see what price does once price gets to these lines. So trading day starts at 2300 on January 6th. Let's see what happens. All right, January 6th, trading day. Let's review. Asian session. We get an hourly signal here. If you're trading the Asian session, for this Asian session, you could have placed a trade once you receive this hourly signal here, and you could have placed your stop losses right outside of the supply and demand support and resistance area. We know this is a supply and demand support and resistance area from here to here. For the Asian session, you would have placed the trade right here, and you would have had a profitable trade here for 500 pips. If you wanted to do an entry on the 3, we could do an entry on the 3 for this trade on the 3-minute chart for intraday trading. You could have placed your stop loss right outside this area, and then on the 3-minute chart, once the price entered into that area, you would have placed the trade with a tight stop loss, and then your profit target could be the next areas of support and resistance. That would be profit target 1, and then you would have a profit target 2 in this area right here. That's a profitable trade with a good profit target. Now, price did not go down in the New York session. What did price do in the New York session? In the New York session, we would place a stop loss here. In the New York session, now remember, we drew these lines. We went back months before and we drew this line here as a monthly area of supply and demand support and resistance. How do we know that this area is a supply and demand support resistance area? Because price came down into this area right here, and then in the New York session, price did not break below the monthly support. Price broke through, price came back to a support area. Now we know this is a supply and demand support and resistance area because what did price do? There was a distribution here. A distribution here. That's how you know. Now, if you're trading the New York session and you wanted to place a trade here, when price got here, what did we already draw before the session began? Before this session began, we were looking to see what price was going to do in this area here. Now we know the New York session volatility usually has three swings of 1,000, 1,500, 1,000. So on the New York session, if we're intraday trading, the New York session starts at 1,300 on this server. What happened once price got to our pre-drawn lines during the New York session? What do we get here? We got a 1, 2, 3, a 4-bar reversal. Now this would be trade practice entry on the 3 for the New York session. We could have traded this trade here with a profit target, here. And that's a 1,200 pip trade. But what did we do before the session began? We expected a reversal in this area, and then we got a trade signal to go short here. We would have entered short here. We would have been patient to let price get into this area first. We would have entered short here. And then we would place a stop loss above the area. We would enter short trade there, place a stop loss above the area. Now remember, we drew these lines before the session began. Very profitable trade. All right, the next trade area. We've got a daily high here. Now, if you wanted to trade long and just hold this long trade through the day, depending on your goals for the trading day, then you could have just held this. You could have held this area here for the rest of the trading day, for a 3,000 pip trading day, if that's your trading style. If you wanted to get more trades in, and you're an intraday trader or a scalper, where you do quick trades, then you would have known when and where to place your trade. You would have traded short here, and you would have went long here for the trading day. And then here comes another short opportunity on the 1600, 1700 hour. At this area right here. Now remember, we drew these lines before the trading session began. Now this trade would have given you 400 pips. And then at the end of the day, if you're an end of the day trader, usually at the end of the trading day, there's either a buy or a sell off as the trading day closes, and then we're getting ready for the next Asian session. This is another monthly high. So we just returned to a monthly high in this area right here, which we could have traded. You have an hourly pin bar. You would place your trade there, and then you would place your stop loss right outside of that area. Very profitable trading day, whether you were trading long or whether you're trading short. Now remember, you need to set your trading goals, but depending on your money management, that move, this one move with this hourly pin bar and the Asian session hourly pin bar has given you during the trading day, that's 500 pips there, 500 pips there. If you're a longer term trader and you want to look for the daily trend, then you knew from this level here, from this supply demand level here on a longer term trade, if you're a 4 hour or a swing position trader, then you would have known this level and this level on the swing, because we're in an uptrend. We're in an upward trending market. Then you would have expected this price from this level and this level to break this level, and that's a longer term position swing trade, and that's nearly 3,000 pips right there. So that's how powerful knowing your supply and demand support resistance levels are. Now remember, we drew these levels before the trading day began so that we could make trade decisions. Now what we want you to do each and every day, you're going to do this for 70 of these daily bars. 70 daily bars. If you are a swing position trader, you can do this for 4 hours. You can do the 1 hour. We don't go below the 1 hour. We enter trades on the 3, 5, 15, but we don't want to go below the 1 hour for our trading method. So what we're going to do is we practice this day. Now we want to practice January 5th. Let's practice January 5th. We start with the day. Daily highs, daily lows. They're already agreeing. We're already agreeing. Daily highs, daily lows. That agrees. Now we're going to do this every day before the at the end of the trading session to prep for the next trading day. Daily highs, daily lows. Alrighty, now what we want to do, we've already got the daily. We've got all of our daily. Now remember, we're doing the 5th 2300, practicing the 5th. And then we're going to go, we want to go to the week to see the agreement on the week. All right, weekly high, weekly low. Weekly high, weekly low. All right, this week wouldn't have been there. Now we need to see agreement. Some agreement here. That's agreement higher. Price may move higher here, so we may want some up here. All right, we've got agreement there on the week. That's close. Agreement there. Here's agreement here on the week. Already have that one. And then we've got agreement here. We already have those. All right, so what we're going to do now is go to the month. We are going to go to the month here. We have agreement there. A lot of agreement. Price may move up here. We want to be ready should price move up in that area. All right, so we've got a lot of agreement for this next trading day. Now remember, we just went back in time and drew these lines. We drew our supply and demand and support resistance levels from 2022, from April, May, June. So we know historically there are already orders at these levels. Already orders at these levels. So now what we want to do is go to the day. We are practicing the January 5th. Now we don't know if price is going to go all the way. We've seen trading days where there's been news where price has shot through all of these, made it up here, right at the supply and demand support resistance area on a news trade, and then came all the way back down. So we don't know whether price is going to go up or go down. So we want to be ready with our levels. Now let's start the trading day and see what levels hold. We'll go to 1 hour. Now this is the 5th. We've drawn our levels. Now we're getting ready. Once price enters into these levels, we want to be ready to plan a trade. Now, if we were actually looking at this trading day on the month, we know this level right here is the first time the trade, the first time price has reached this high in a month. First time. So if you look at the monthly chart, the price is entering into these supply and demand support resistance areas on the month here. So what we would expect price to do on this next day, we call this first time back training. Price entered into this supply and demand support resistance area for the first time during this month. This is January 3rd. January 4th. Now what we need to do is make sure that our area is going to hold. But first time back, when you do first time back studies, you'll understand that price on the monthly chart for gold usually comes into an area and drops at least 1,000 to 2,000 pips on a monthly chart. So once it enters into a monthly supply and demand area, gold usually drops between 1 to 2,000. So we've got these areas drawn for the trading day. Now depending on your trading style, you can enter a trade in this area and then you can place a stop loss in this area right here. Price is entered into the area. Now let's see what happens. All right, so for the 5th, what do we have here? We have price entering into this area, 2 o'clock Asian session. The 2 o'clock Asian session, you have an hourly signal to go short. Depending on your trade management, your risk management, you could place a stop loss here, you can place a stop loss here, and then let the trade run. You could have held this trade for the whole day until the 1500 hour in the New York session. Now remember, we drew these lines before the session began. This monthly line was here months ago. This weekly line was agreement months ago. So now when price came back down to the week, this weekly monthly line, price acted as support. You could have held this trade right here until the 1500 hour, and then if you wanted to trade long as an intraday trader, then you would have placed a trade long here on your intraday trade. You would have placed a trade long there with a stop loss underneath there. Now, you can get excited. This is exciting. This happens on a daily basis. Now, remember, we drew these lines before the session began. Now, let's look at this on the 3-minute chart. If you're trading Asian session, now this is around the world. If you're trading Asian session, then you can earn a living trading Asian session. We've got trade signals on the 3 here that say go short. This is a trade signal to go short on the 3. And this is a very, very precise entry. If you traded this one on the 3-minute entry on an hourly trade, then you would have gone short here with this trade signal, and then you would have placed a stop loss right here. Very tight stop loss. And your risk to reward ratio is almost 3 to 1. Well, this one is way over 3 to 1. Your risk reward here is over 100. Because you have 3,000 pips here, and your stop loss was 100. 103,000. All right, let's go ahead and let that play out. Asian session trading. What did price do here on the Asian session trade? If you wanted to trade this level, you could have traded that level. If you're an intraday trader or a scalper, you can trade these levels with your stop losses above or below the level. We actually placed this trade here for a profitable trade. Very profitable trade. And then it comes to your trade management. All right, this is for an intraday trade here. Asian session, you have 2 trades. That's for 850, depending on your trade management. This trade is for 500. We have a pin bar, a bar reversal at our supply demand support resistance area. Then we trade short. We have a consolidation, supply and demand support and resistance area. We have pin bar. We can get in a trade short here. Trade short here at the London session. London opens at 8, so we're in London trade right now. London trades short to start the London session. You could have started the London session short here based on these trade signals here, supply demand, support resistance. You could have gone short at the London session, held, or profit. These are your profit targets. We know the trade is trending down. We know the day is trending down. And then if we wanted to actually start another position trade for the week or the month, then what we would have done here is we would have placed a trade long. Remember, we're practicing the 5th. So on the 5th at the 1500 hour, we would have placed a trade long, a position, a swing trade long here. We know we're in an uptrend. When you scroll out on the hour or the 4-hour chart, you see on the chart we are in an uptrend. We're in an uptrend for a swing trade. We're in an uptrend, and we know consistently that this is now a area of support. We can place a trade at this area of support. And then we would place our stop losses. We already have a stop loss line right there, so we can remove that. On the 1500 hour, we can place our stop losses outside of this area of support using great risk management. And then we could hold this trade for a position trade, a swing trade, or even a position trade, because you would have taken profit here on your position trade, and then you would have gotten back in here expecting the month to end higher on a position trade. So this could be a swing / position trade based upon this area of supply, demand, and support resistance. How do we know? Well, what did price do here? There are already orders in the market waiting here to drive price up. So we've got a lot of demand at this area. So that was a great trading day for the 5th. Now remember, we drew these lines before the trading day began. We drew these lines. We found agreement, and we drew these lines before the trading day began. All right, we're going to do another day, and then you're going to start practicing this yourself. Back test. You're going to buy, sell, and then what we want you to do is find a tool where you can backtest, and see profitable trades. Now remember, week 1, what we want you to do is place if you're trading a live trading account with great risk management, using this method, we want you to place a live trade using this method to be profitable. We want you to be profitable in week 1. Now remember, this happens on a daily basis. We just practiced these 2 days. We're going to practice one more day, and then you're going to practice yourself. For 70 bars, 70 of these bars, you will practice the every day for the last 3 months starting today. Starting today. All right, we'll do that again. So this is our daily highs, daily lows, daily high, daily low, daily high, daily low, and then we're going to go find agreement. Daily high, daily low. Price may move down, so we want to do daily high, daily low. Daily open, daily close. Daily high, daily low, daily open, daily close. Now remember, this happens for hours too. Daily high, daily low, daily open, daily close. All right. Now we want to find agreement. Let's go find agreement. Let's find weekly agreement. All right, remember, this week would not be here. All right, this week agrees right here. Agreement there. Agreement there. Now remember, this week is in the past. Agreement there. So we're drawing these lines before the trading day. I'm going to find agreement. On the day, the week, the hour. We're going to find agreement for the days. Well, look at that. That's on the week. That agrees. We'll place one right there. Agree, agree, agree. Find agreement. Price may move up outside of that area, so we want to make sure we have agreement. Should price go all the way up, we want to make sure we're ready for that. You may have news events on your platform that drive price up into these areas, but price will honor them. Once price gets to an area where there's enough buyers or there's enough sellers, then you're going to get a reversal. Exciting. You will be a profitable trader from week one should you trade at these areas, have great money management, and be disciplined to trade at these areas, and then place your stop losses right outside the areas with great money management. Then you are a profitable trader from week one. And then once you're profitable, we want you to go bless somebody. If you have a cause in your neighborhood, then teach somebody else how to be profitable. All right, that agrees. That agrees. We have a lot of monthly agreement here. Already got that one. Then, alrighty. On the day, let's see what happens. All right, so we just drew these levels before January 4th. We're practicing January 4th. We practiced January 6th. We practiced January 5th. Now we're practicing January 4th. Let's go to the hour. Trading day on Tradingview starts at 2300 Asian session, Asian range. Now there may be some in here that we may need to draw. See what happens in these areas. All right, Asian range. Here we go. Asian range. January 3rd. All right, we just hit a supply demand area where we could have placed a trade long here. We could have placed a trade long here at this area on the 3. We drew this line. We drew this line before the session began, and this area of support and resistance held. So we could have placed a trade long here with a stop loss underneath here. Our stop loss would be right there, long. So that would be one Asian trade that we could have traded right there. All right, that's the trading day. All right, let's see what happened for the trading day. All right, we could have placed a trade long here. Price went through this area, so we'd remove that. Price went through this area, we would remove these. So this would have been a position, a continuation of the trend trade from the Asian session. A continuation of the trend trade from the Asian session. Now these lines, these two lines that are being drawn right now were already drawn for the previous month. All right, so let's look at the trading day. We have a continuation. Now price moved up into this monthly support and resistance. The start of the London session. If you're intraday trading or swing trading at the start of the London session, then you have an area that you're going to trade. You have an area that you're going to trade at the start of the London session when price reached this area. for the London session. You have a trade signal here to go short from this area on the London session. You'd have placed your trade signal here. You can enter on the 5 minute signal here on the London session. You have a 5 minute signal here, 5 minute signal here. And then you would have placed your stop losses from here to here. Now remember, we drew these areas before the session began. And then we know by our daily range studies that this price has already moved into a high area of a daily range. That's 3,000 pips. Gold usually moves, the high end is 4,000, but that the daily range has already moved 3,000 pips, and it's entering into, that's 35. So we're entering into a high end of a daily range during the London session on the month. So now what we can do, London session, is we can plan our trades. We probably would say this may be a daily high that we want to hold for the rest of the day. Now let's see what happened for our New York session. Now remember, we drew these lines before the sessions began. We can remove these now. We drew these lines before the session began. And then you can start removing lines as the trading day moves. So we know the New York session usually goes between 2,000 and a high end of the New York session goes 3,000 pips, high end. But usually the New York session is between 1,000 2,500 pips. So on the New York session, with the supply and demand areas that we've already drawn, again, let's be sure that we have agreement. Now, this is June 2020. We drew a line from June 2020. We drew a line from May 2022. I'm sorry, June 2022. May 2022 monthly. This is an agreement. May 23rd. These are high, lows, open, and closes. Those areas are repeatable buy, sell areas, supply, demand, support, resistance areas. So we drew this before the session began. So now on the 3, if we're intraday trading, we have trade signals here at the 1300 hour. We could place a trade here. We could place a trade there, green for trade, and then we can place a stop loss, a tight stop loss for the London session, if we're intraday trading the London session, for a great trade of 1,300 pips. And then this area we know is a monthly supply, demand, support, resistance area. At the end of the day, there's usually a buy off or a sell off to reconcile the books. So what happened at 1900? At 1900, price respected the area. That's another 500 pips. You would place the trade long and then place your stop losses outside of that area. But you're going to get a trade signal at the area of supply, demand, support, resistance. Supply, demand, support, resistance never lies. How do we know? Well, price went down here, 1,300 pips. We know that that is an area of supply. We know this is an area of resistance. Price broke through, came up, it could not go past, and then the sellers kicked in and the price went down during the session. That's how you know. That is price action at its best. And then you can plan your trades based on these levels. You trade once the price enters into a supply and demand support resistance area. That means you would have to be patient. If you weren't in this trade as price was moving up here, then you would wait until price moved into this area, and then you would place your trades based upon known supply demand support and resistance areas, and then also more training. Once you know the average daily moves for whether you're trading a stock, whether you're trading gold, silver, metals, oil, whether you're trading euro, USD, once you know the hourly, daily moves, then you know once we're reaching a high end or a low end of an hourly move or a daily move, and the price is entering a supply and demand support resistance area, and then we get a signal, then that is a great area to trade in for a high probability, lower risk, higher win ratio trade. All right, week one goals. Let's review our week one goals. We want you to be consistently profitable from week one. Consistently profitable from week one. We want you to backtest every daily bar for at least 70 bars. 3 months of backtesting. Be profitable from week one. Find one trade using this method, and you will have been given back your investment for this training. Goal 2, draw accurate supply and demand support and resistance areas. You will find your own style as you do it. Now remember where they are. They are out here where you get high profit, monthly highs, monthly lows, monthly highs, monthly lows, monthly highs, monthly lows. And then you find agreement with your weekly highs, your weekly lows, weekly highs, weekly lows. And then you find agreement with your monthly highs, monthly lows, your monthly highs, monthly lows, monthly opens, monthly closes, your weekly high, weekly lows, weekly open, weekly closes, your daily high, daily lows, daily opens, daily closes. And that goes for hourly, and if you're scalping, and you can even go to a 1 minute chart, and you can see the same patterns on the 1 minute chart. Supply, demand, and then you have a sell off right here on the 1 minute chart. Supply, demand, and then you have a support resistance on the 1 minute chart. So this method works for every time frame and every type of trader. We want you to be profitable from week one. Do this for 70 bars. Come over and look at the assignment. Read your trade psychology note. This one is you've never missed a trade. You have never missed a trade, and you have never missed a market move. Should the market be around today, that means every day that you look at this market, you have an opportunity to earn a living every day. So if you didn't trade yesterday, or you believe that you missed a trading move yesterday, then you do not dwell in the past. You say, oh, thank goodness, thank you, Lord, we actually have today to trade. Should the market be moving today, then you have a trading opportunity based on the skills you are learning to earn a high living. All right, traders, More to come. Review the references, do your study, and then we will see you in the next lesson.